Vinit Bolinjkar joins us, Head of Research with BSE Securities. Vinit, welcome to the show. Thank you for joining us. Before I come to you, what did we have? We have a nice little rally on the markets. Hello. We are up about 100 points. Let's put that fat band out, which will just, in a sense, capture that from the day's low, which is just in and around 18,200. We've had almost a 100-point rally. So that's the Nifty for you. It is now confirming that institutional buyers have appetite to buy even at higher levels. Vinit, what's your view on the market? Do you think best part of the gains are still left, even though we are up 1,500 points in the Nifty?
So I think, we are just kind of getting the momentum together, and we're taking cues from the global markets. The US markets, in spite of absolutely pessimistic news, is hovering around the high levels. And we believe that once the scenario around the debt ceiling is resolved, markets will inch higher. We are quite bullish on that space, and we believe that India will outperform massively in that run.
Look at global markets, the more I'm forced to think that US banking sector will slow down. They will be forced to slow down after the problems in the regional banks. What would be the implications of that on the world economy, on demand, on global GDP? Because everything is interrelated. US banks don't lend, if they lend less, that's bad news for everybody.
Yeah, so I think India is in a sweet spot to take benefit of that entirely. Reason being that we are extremely cost competitive. We are significantly lower in cost compared to China. Europe's costs are going up. So naturally, what is going to happen is that sourcing is going to move to India purely from the economical standpoint. Number one, we are under leveraged. We have got spare capacities. Our organizations are on the ramp up of capex. Interest costs are bound to remain very, very benign over the next 2 to 3 quarters, given the fact that the steep inflation climb of last year would get kind of suddenly become a base effect. And I believe that these all portend very well for the Indian economy, not only from the standpoint of the domestic consumption, domestic economic recovery, as well as an export opportunity that is staring at us today.
Meantime, Vinit, just wanted to get in your outlook then as to what the sense is when it comes to capital goods. For instance, you've got UBS's report as well, that's on Siemens. They're talking about a strong growth phase that's underway. We're awaiting a strong set of numbers from L&T. Where is it that your preference lies?
So we like all these counters that you just mentioned. We also like the fact that, a lot of the recovery is going to be manufacturing oriented. And there are other stocks like Vent India, Cummins, which are also engineering plays. We like Kirloskar Oil. These are some of the stocks that we believe from this space of capital goods should offer significant investment opportunities for investors.
You've been advocatory of Adani group of stocks, and suddenly markets have stopped talking about them. Why is that?
So if you see the Adani issue, right, we have the stocks were hammered out. The markets have suddenly recovered a bit, and their status quo. The SEBI has asked for a 6-month extension. So as long as the air is not cleared on the corporate governance side, which is the SIT monitored by the Supreme Court, I think the stocks will languish. And we believe that until that, they don't get a clean sheet or, a positive report coming from there, getting growth capital for the group as such would be a challenge. And for Adani, which is so heavily centric on infrastructure growth, right, they would require growth capital. So we've already seen them cut down their spend in Adani Enterprises from 5.2 billion to about 3.8 billion. So that tells you the challenges that they face. And, notably in the case of Adani Enterprises, what was important was that, their hydrogen vertical spend start. But, they need significant amount of capital for that, fairly large. They would be requiring multiple rounds of investments. And that is just stalled for the time being. So unless and until they're able to get the growth capital, they will keep languishing. Having said that, what I believe is there are a couple of stories out there like Adani Total Gas and Adani Ports, which offer very, very lucrative dividend yields with sacrosanct business models, good margins, and I would be a buyer in these stocks, but I'm just waiting for the air to clear around uh, the SIT report that is scheduled maybe over the next 5 to 6 months.
Why is IndusInd Bank underperforming? Last 2-3 quarters have been good for them, but markets they continue to worry about sometimes the book quality, sometimes the growth number, sometimes what's going to happen to the Hinduja stake. Why is that markets are not giving a clean sheet to IndusInd Bank?
So all that you mentioned have been always an overhang on the stock. But I think with the economy doing well and the banking sector firing, and I believe that the benign interest rate regime that is upon us over the next 2 to 3 quarters, augurs well for IndusInd Bank. I believe there will be a strong catch up with this stock, and I think it will outperform the entire banking pack.
Vinit, from March 29 lows up until now, have you added positions anywhere? What have been your latest buys or recommendations of buys?
So, we just recently initiated on Gulf Oil. We believe that the story of the EVs is overdone. As far as CVs are concerned, at least till early 2030s, we don't expect CVs to get electric on a massive scale. Even if you talk about the 2Vs, healthy penetration playing out into 2026, we believe that the quantum of vehicles that are there on the roads today, which are non-EV, will continue to multiply. And Gulf Oil is gaining market share, they're gaining OEM share, they're building out their network. Plus, they're also getting future ready with rollout for the EV infrastructure. They have taken a stake in a UK-based home charging company, and here they also have a infrastructure platform where they have a significant stake, and this stake for charging has got a very large market share, about 40%. This platform is called Electrify. And given all these future ready plans, their current business, and they're expected to grow volumes at double digits over the next 4 to 5 years, I think this augurs very well. Last year they did a buyback, and they quoted a significant discount to Castrol. They've got a very large growth factor there, and we think that the PEG ratio ordains us to put a premium on Gulf Oil rather than on Castrol. So we are very bullish on this stock. The other stocks that we like is Eicher Motors, who is reporting today. We are bullish on KC International, where we expect margins to come back, and 15 to 20% growth with margins going from 5% to 8%. That is what they commented as an exit rate over the next year. So I think on an 18-month period, this stock is a resounding play. These are some of the large cap and mid cap ideas that we are recommending to our clients.
Some interesting recommendations being flagged off by Vinit as some of his top trading recommendations.